Hey traders, Britton Brown here with TradeHiveCommunity.com. As I promised, I would get you this COT report. That's the Commitment of Traders report, done before the Super Bowl, and so I'm back in town. As I was telling you the other day, that last week and this week and even next week are probably the most interesting Commitment of Trader reports we've seen in probably over a decade. So I'm going to go over the numbers for you, help you build a bias for the upcoming week, talk about what happened, because that report comes out, it comes out on Friday, but its week ending is on Tuesday. And so that's what really made this super interesting when I saw it. This week, both the NASDAQ and the S&P saw capital flow back in. Open interest expanded, institutions added exposure. The hedge funds are still short. And that tells me we're headed back to expansion mode. This is going to turn into, from my standpoint, this upcoming week. We'll see what happens tonight, but this will be a risk-on environment. And so last week I was telling you that it was mostly scalping mode. I wasn't going to hold anything. There was no real swing trading. The focus was, again, the scalping side of things. This week it's going to be about pressing in those pullbacks. Holding those winners, following the money, and trading the edge. So I'm going to take you through kind of what I saw because the report is up on the website, and I would go through it from the ES side and then go look at the NQ side. So that way you have things separated. But what I like to do is blend these things together, and because even though the NQ can act on its own just like the ES, most of the time they're heavily correlated. And so when I put this together, it's to give you a real professional, institutional desk traders methodology as to how they're approaching that market, where they are, because we want to follow the money. And I've said it before, and I'll say it again today. They're the whales and we're just the sucker fishes, and we want them to go out and start eating, and then we're just going to take their leftovers. They're going to do the heavy lifting for us. Just a market snapshot. The NQ open interest is sitting right around 268,823. That's a weekly change of just over 8,000. So what that signals is risk is actually returning. And this is really interesting because I'm going to get into what happened Wednesday and Thursday and why we saw what we saw on Friday. The ES sits over not quite the 2 million mark. It's a million nine 476. So we saw a weekly change. Open interest was up 31,015 contracts, and that's a strong re-risk. So what that means is capital is coming back in. This is not distribution behavior. And so when we're looking at it, again, it's Tuesday and we're getting it on Friday, and then we see this big massive sell-off on Wednesday and Thursday right into deep discount prices. And then we saw this great rebound Friday, we'll call it early Friday morning or Thursday night into Friday. And then we just saw the grind higher all day. Who owns price, right? Let's look at NASDAQ first. In the NQ, asset managers are net long 72,324 contracts, so still strongly long. The dealers, their heavy hedge remains. They were net short 78,497 contracts as of Tuesday. The read there is going to be institutions are holding risk, dealers are protecting, and so it would be kind of more a controlled but cautious behavior. On the S&P side, the asset managers are net long 933,226 contracts. So that's massive long exposure. As I said, open interest climbed. That's good. On the dealer side, they're net short. They're still hedged 663,207 contracts. So core money is firmly long. The dealers are well hedged, and we saw them taking advantage of that. And I think that's really, when you look at what was happening with the option side of things on the 0 DTE, especially not necessarily on the NASDAQ side of things, but on the S&P side, we saw gamma explode. We saw massive hedge volatility. And that's really what shored up the market is it just came right back and stabilized it. So even though you saw a lot of liquidity flying in and out and hedge protection, that's what the internal basis was. So who's trapped, right? That's really what we want to know. The hedge funds were net negative 11,380. They added longs, they reduced the shorts, put bearish pressure from the bearish pressure side of things. That was easing. On the ES, the hedge funds added shorts heavily coming into Wednesday and Thursday. They were still leaning bearish. So what's the read? The hedge funds are softening in the NQ. They're stubborn in the ES. But what's cool is that provides us with a short squeeze risk that's rising. Fast money is wrong-footed. That's the best way I can put that. So where are we in the cycle and participation side of things? Early or late? Evidence is pointing open interest is expanding. Asset managers are adding. We have participation rising, and this is a re-acceleration. On the composite cycle, we have expansion, re-risk phase. So that's the market is leaving the compression that it was building. We saw it lead to the downside. And who's leading in this? The NQ hedge funds were backing off. And as I said before last week, you could see that things were totally different from my viewpoint between the NQ and the ES. And that's why I like to go back to, even though I trade on the ES side of things more than anything else, or on the NQ side of things more than anything else, ES is the foundational leader for me, and I want to know what's going on there. So broad-based risk on, tech, core, everything starting to align. The Trade Hive Risk Regime Index, I mentioned that last week, and how I score that. It's basically from a control, pressure, cycle, leadership, and liquidity standpoint. And what I see from the control side, I gave it a +1 based off of this scorecard. I see bullish. Institutions are heavily long. On the pressure side, I see a squeeze risk now happening. The funds are crowded short. They're on the wrong side of this thing. So, with open interest rising and the ES and then the NQ aligning now back into the bullish side of things, capital inflows are improving. That gives me a plus, basically a +4. I was -2 last week, and that's why I say it's expansion risk on and press the trade territories. So I'm going from scalping to more the swing side of things. But I know institutions are committed. Shorts are now vulnerable. Liquidity is expanding. Momentum is favored. This is likely not going to be a chop environment. I'm doing this. It's 5 o'clock before the Super Bowl, and immediately we have NQ is up 75 points right off the open. We gapped roughly 30 points higher from the close, and now they're rocketing to the upside. So let's look at risk monitor, the regime flip triggers. So we have the bear shift if the asset managers start cutting the 40,000 longs, that would change some things on the upside. If open interest falls 2 weeks in a row, that would be a game changer. And if the dealers continue to add to their shorts, roughly 20,000 shorts, that would flip things back around. And that's why I say last week, this week, and next week's COT reports are super interesting. So with that said, let's talk about really what happened from my standpoint. And I think this is going to give you the best insight I can give you as a trader coming into next week. And that is people see a sell-off and think the trend is broken, right? And I talked about it. I said it on Friday. I said this is going to be a bullish day. Why? Because we were deep discount. Could we go back down? Sure, we could go back down, right? But what was I anticipating? A breakthrough for more liquidity and then a reshot right back up. We're still in a bullish trend. We're just in this massive consolidation. So again, people see a sell-off and think the trend's broken. I see positioning and think liquidation. Big money's long, hedge funds are short. that told me volatility was coming, and I was warning you that this is not hang on to a trade. That sell off to me clears weak hands. Friday was defense, and that is institutional behavior. And so I hope you understand what I just gave you is a really good foundational bias coming into next week. Understanding, go back through the commitment to trader reports for the ES and the NQ. I'm just summarizing it for you and saying, hey, everything is validated, right? We got good volatility, good pressure, good expansion. We got a violent flush. We got a violent rally. And that is a risk on transition. And that's why I'm so favorable to the upside. And again, and we're rocketing right now. So enjoy the Super Bowl. Hopefully that was super helpful. If you have any comments or questions, feel free to leave a comment, give it a like, thumbs up, whatever, subscribe, and I will be happy to get back to you. Again, those reports are free at tradehivecommunity.com. I will be posting my playbook in the morning to help you out, and we'll see what happens tonight. But look for any chance you can get on a pullback. I think is going to be a really good opportunity. Right now, the NQ is trading at 25,252, 256. There's a pretty good bid ask difference right there going on right now, but looks like people are scrambling to get some longs positions. So appreciate you taking the time to watch. Again, good luck, and I'll see you in the morning.